what's up guys, Michael here. In today's video I will be talking about the Ichimoku indicator. So it will be beginner tutorials, how you should start to work with the Ichimoku, basically all the basics that you should know about this indicator, how you should read the signals, how you should read the market using the Ichimoku indicator. So I will dig down in the all ingredients that it has, all the lines that will be explained, and how you should read their signals. So let's this is the Euro USD currency per chart, and let's start to work with the indicator. Go for the indicators tab. Add the Ichimoku on your chart, and as you will see, it consists of a couple lines and some kind of a cloud, which is basically its name. So first let's start from describing all the lines respectively. So the first one will be the Tenkan line. There are basically the moving averages. The Tenkan line is 9-period moving average, and it is just not smooth out. So basically you should read it more or less as a moving average, and basically as it is a very short term, very short period, so it indicates the short term trend. So basically when the price is below this line, it indicates the bearish bias. When it is above the line, it indicates the bullish bias. So next one is the Kijun line, which is this orange line. Maybe let's mark them. The orange line, which is also more or less a moving average, but it is a 26-period moving average, and it as it has those numbers, it shows the medium term trend bias. So basically when the price is below this line, it indicates that there is a bearish bias, and if it is above this line, the price is above this line, it indicates the bullish bias. So that's basically those first two lines. And here we have the lagging line, and it is originally it is called the Chico line, but there are many names like lagging line, lagging span, etc. Basically what it is, it shows you a bigger picture on the market. That is its purpose. So if we will zoom out at the chart, it will be better to explain. Basically, when the line is above the price, it indicates that the market is still underpriced and there is a bullish bias. If the line is below the price, it indicates that it may be overpriced already and the bearish bias is possible to start. So that's basically how it should be read. Its signal. So maybe let's go back to this example. And the last thing that we will discuss is the Kumo Cloud, which is basically it's made also from two lines, which is the span A and span B line, which you can see also. Stop moving. Also here. So the green one is span A, the red one is span B. So basically the Kumo Cloud, it shows you the strength of the trend. When the lines are very the distance is very wide, it suggests that the trend is strong, and when the line starts to converge and changes direction, the crossover suggests that the trend might reverse, that the price might change its direction. So of course when the span A crosses the span B from the top to the downside, that means that there is a possibility of starting a reversed trend. So that is basically it if we are talking about their purposes. Maybe now let's start explaining how you could read their signals. So first thing that I need to say, which is like a mantra, if we are talking about the Ichimoku, you never should take trades when the price is inside the cloud. So that is the first rule that you need to remember. So let's start from the Tenkan Sen and Kijun Sen, which are those two lines. Basically, it's the strategy is as with most of the moving averages. When the Tenkan line crosses the Kijun line from the top to the bottom and to the downside, thus suggests that the downtrend might start and we should open a short position. If it happens in the opposite direction, which is Tenkan Sen crosses Kijun Sen from the bottom to the upside, it suggests that the trend might change its direction and we should open a long position. But what is also the key, that the Ichimoku is a trend-based indicator. So if the price is start to ranging, you shouldn't use this indicator. You shouldn't use their signals, which are basically situations like, maybe it is visible good here, when the lines are constantly crossing each other, like here, and they are going aligned with the price. So that these are the moments where there is most likely the indecision on the market. And also, as you can see, the Kumo Cloud is changing its direction all the time. So that is these are the moments where you shouldn't use, and you shouldn't use Ichimoku, or just don't follow the signals that are produced by this indicator. So that's the first strategy. The second thing is how you can filter the entries with the lagging span. So right now we can also add to the filtering the lagging span, the lagging line. And if we have the the situation like this, when we have the buy signal, which is the Tenkan is crossing Kijun from the bottom to the upside, but the lagging span is below the price and below the lines, thus suggesting that there is a bearish bias. So therefore this signal would not be we can say correct, or just not strong enough. Therefore, we should only take the short trades when we have the lagging span below those lines and below the price, as we had right over here. And you can also see, if we check a little bit further, that still there was a buy signal, but the lagging span was below the lines, thus suggesting still the bearish bias. And we have again the situation when we are consolidating, the lines are crossing each other constantly. So another filter what we could use is the Kumo Cloud, and it basically is more or less the same situation as with the lagging span. So if we have situation like this one here, when we have the crossover of the lines, the Tenkan Sen crosses the Kijun Sen from the bottom to the upside, and the price is above the Kumo Cloud, thus suggests that it is a vital signal. So you have all the pieces right now, that we have the lagging span, the crossover, and it is everything above the Kumo Cloud. So another thing how we can use the Kumo Cloud without the lines even, is that when we have the crossover on the cloud, which is basically when the span A crosses the span B. So thus suggesting the signals, which means, for example, if we have situation like here, that we have the span A crosses span B to the upside and the price is above the cloud, thus it suggests us the buy signal. When we have the opposite situation, like here, when we have the span A crossing span B to the downside and the price is below the cloud, thus it is suggesting the short potential, a short trade potential entry. So again, you can use it also if we have the opposite signal. I'm talking about the situation when we have the crossover suggesting a buy signal, but the price is below the chart. Okay, so maybe something like this. When we have the crossover, the span A crosses span B to the upside, but the price is below, thus it also suggests a buy signal, but a very weaker, we can say weaker one, which you should read as a weak buy signal, and thus maybe use a smaller risk reward ratio, maybe not 3-to-1 but 2-to-1, for example, or 1-to-1. Depending on the situation. And in the opposite, the same. When we have the signal, for short and the price is above, thus it also suggests a weak sell signal, and we should treat it the same with a smaller risk reward ratio. So the last signal, one of the most popular signals, is when the price is crossing the Kumo Cloud. So basically, if we have a situation when the price is entering the cloud and is going outside the cloud, thus suggesting us the potential entry, for example, for buy in this situation. And for example, in here for sell, also here. Oh, this is a good example. We have the price entered the cloud, exited, thus suggesting the potential sell entry. So I think I described enough of the trading ideas, trading signals, and guidelines for the start, for you to start working with the Ichimoku. And as always, remember to leave a comment. The construct critique is always welcome here. And also, as for the Ichimoku last words, remember not trade in the cloud and not use it in the ranging markets. And don't forget also to check the Instagram and TikTok, the LiteFinance broker channel. I'm also posting stuff like this over there, so be sure to follow those accounts. And yeah, if you like this video, like this one, just subscribe for more. Thank you and goodbye.